Hi, so I'm looking at your assignment number 2. I've had a couple of students ask me how to go about this. I think they're really having trouble with the spreadsheet or using the spreadsheet that was given. So I'd like to just show you how I would approach this. So first download the spreadsheet. We want to, in part A there, we're calculating these ratios. If you click on the word spreadsheet provided, it should download the spreadsheet, and there it is. And then once you've downloaded it, it should only take a second, you can open that file. And going back to look at the question, well, part A is compute all of these ratios. Let's see if we can find a problem on the spreadsheet. And these are the end of chapter problems from the chapter 4, the text that I asked you to read. It's in the contents section. But we don't really need to read the problem itself. It's pretty much reads like what we're asked to do. And here you can see, here's these ratios: current ratio, debt ratio, times interest earned, and so on. And actually, it looks like, let me just move this over. Actually, I think I'd like to just kind of condense some things, make it easier to see, so I can squeeze this window over. Yeah, current ratio, asset test ratio. Well, asset test ratio isn't on there, so I might have to add that. Days in inventory, days in receivables, gross profit margin. But most of these are over here. Looks like gross profit margin, operating profit margin, inventory turnover, fixed asset turnover, total asset turnover, debt ratios there. So everything except, looks like everything is there that I would need except for the asset test ratio. Actually, the asset test ratio, no, it's not there. Okay, so I would need to add that, and I would need to days in inventory needs to be added. Days in receivables is there. That's the average collection period. It's the same ratio. So most of what I need is right there. So if I could just use this part of the spreadsheet. Problem is I have to use live data from quote unquote my firm. My firm I chose to be Smith & Wesson, which is a company that's in my portfolio on MarketWatch. So all I did was, well, I can show you what I did. I went to the MarketWatch game that we all are playing, went to my portfolio, clicked on portfolio, and just selected, you all have done this, I don't need to show you again, but anyway, so you click on financials, and the default is the balance, I'm sorry, the default is not the balance sheet, it's actually the income statement, as you can see there. You have to, so to see, balance sheet is there. And I think I'd said to use the most recent year. If I were thinking ahead, I would have said to pick probably something earlier than that. But so anyway, so I'm going to use this balance sheet and update these numbers over here. Why? Because these cells have calculations in them as well. Like for example, total assets has current assets plus fixed assets. Down here on the income statement, for example, we have EBT is operating income minus interest expense. Net income has EBT minus taxes, and of course down here these are our program cells that are use these up. The inputs come from the balance sheet and the income statement. So I need to update these numbers. Okay, so let's start with cash and just use the broad. We don't need the sub accounts, just the top account. So for the most recent time period, that's 2014. So that's, I'm going to do it in millions. So that's 68.86. 68.86. You can see I'm entering it over there in the spreadsheet and going down. And then accounts receivables, that's here. That's 60.54. So 60.54. Inputting that. And then inventories, that's also here, 86.74. Okay. But this also has this other category called other current assets, and that's not over here. So I'm going to have to adjust my spreadsheet balance sheet. Just go ahead and right click on the row and click on insert and add other current assets. And what do we have for other current assets? We have 23.03 over there. See right there. So 23.03. Add that in. Now, you notice current assets didn't change. That's because this is a calculated box, and it doesn't include doesn't include the other current assets number yet. So I'm going to have to say go down there and add to the end of it plus this extra item, other current assets. So now it's 239. Now you probably want to check to make sure that matches up with what's over here on MarketWatch, and 239 does match up. These of course are rounded off. So far so good. We're at 239 current assets, which is what it should be. And now we go down to the fixed assets, and we see we just have one line, net fixed assets, on our spreadsheet balance sheet. And over here we have several long-term assets. We have property, plant, and equipment. We have investments and advances, long-term notes, intangible assets, and other. Yeah, we could be a little bit lazy, take a shortcut, and just say total assets minus current liabilities equals. But really, what we should be doing is including all of those accounts. So I'm going to go ahead and include those. So we have, let's see, property, plant, and equip, and that number is over here. It's 120.44 million. I'm going to have to add one. Actually, looks like investments and advances is 0, so I'm going to go ahead and ignore that. But we still need. This is net property, plant, and equipment, so it's already net of accumulated depreciation. I don't need to subtract that out again. They've already done it for me. So the next item I'm going to go here is long-term notes. I'll add a line for that. I'll add a line for intangible assets, and then I'll add a line for other long-term assets. So let's go over here just below property, plant, and equipment, and I'm going to need 3 more lines. So 1, 2, I don't know how to add more than 1 row at a time, so I'm sure there's a way, but I'm too lazy to find out what it is. So the next item we had was what we say? There's no investments in advances, so long-term notes receivables. So I'm just going to write that as LT for long-term notes. And yeah, well, anyway, that's good enough. It's under assets. So that's 1.90 or 1.9 million. And then the next item we have is intangible assets. And that is 343 million, or 3.43 rather, 3.43 million. And then the next item is other assets, other long-term assets, we should say, as opposed to current assets. And that is 16.57, 16.57. So enter that. Now we have to adjust. This is going to be, well, this line, I'm just going to make this equal to the sum of these long-term assets. So it's going to be this box plus this box. You could use the sum function. That would work as well. But I'm doing it the long and hard way. So plus this box. I'm just going to add them together, hit return. Okay, I must have done something wrong. But at any rate, did I add them together? It comes up with net fixed assets of 142 and total assets as good, current assets plus fixed as how much? 382. We might want to verify that that matches with our MarketWatch balance sheet, and indeed it does. Round it off again. The real numbers are in there, it's just the spreadsheet's rounding off for display purposes. So we're done with the left-hand side, or top side, if you wish, of the balance sheet. Now let's go to the liability, debt plus equity side, and try to make those match up, again, with using 2014. So we have, well, the first line here is accounts payable. That's actually not the first line over on MarketWatch. It's 37.69, so 37.69 is accounts payable. And then we have accrued expenses, which ordinarily would be like income tax payable, but here it's 0 so far. It's kind of odd. You'd think Smith & Wesson's making a profit, but at any rate, so that's 0 in this case. Next line is short-term notes payable. That's up here, and that's 469,000, not million, thousand. So that'd actually be 0. These are all in millions, so that'd be 0.469 million. That's all the current liabilities on the spreadsheet, but are there other, here this again, there's this other line called other, so we would need to again add that. So insert this additional category, other CL for current liabilities, and enter that number 92.54 for other current liabilities. And now also we would need to adjust the calculated box to include that other, so plus the other current liabilities. Okay, so let's see if that matches up. We have total current liabilities is 131. And let's see what we have down here. We have total current, I'm sorry, I misentered something, didn't I? Where does it say other? Other current liabilities is 54.39. What did I have? 93. I must have been looking at the wrong box. I changed that. That's supposed to be 54.39. Excuse me. So we can change that and it automatically recalculates current liabilities as 93, which is what it's supposed to be, 92.54 rounded off to the nearest million. Okay, now the next item is long-term debt. Well, and then we have other long-term liabilities, which are included in long-term debt. So really, we really should be adding those. Okay, well, I guess we could go ahead and do that. You know, it would actually be easier. Well, okay, I'll again, not take shortcuts. So how many lines do we need? We have long-term debt plus provision for risk and charges plus deferred taxes plus other. So I need 3 more rows again. 1, 2, 3. I'm going to add the provisions for risks, etc. And that is 623,000, so 0.623 million. And then the next line, deferred taxes. That is 11.42 million, 11.42. And then we have other, these are long-term liability. I can't spell liabilities, can I? Okay, whatever. I don't care if I spelled it wrong. 8.1 million, that one is. Okay, so total, and then we have long-term debt. The long-term debt in here is 102 million from here. So change this number to 102. Well, really this should include all these other things, shouldn't it? So let's go ahead and include it. Not entirely sure if that's wise. At any rate, owner's equity, let's leave it for now. Total liabilities should add up to well, all these things. You know, if long-term owner's equity, we'll adjust it at the end, is 166.82. There's a total equity is 166.82. So let's change that. 166.82 million. Whoops, did I mess up? Yeah, it's this box, wrong box. 166.82. Okay, and then this needs to also include the other items, that plus the deferred taxes and the other liabilities need to be included. That brings us up to total liabilities and total debt plus equity is 382 million, which matches up. Okay, so now our balance sheet balances. Next, we can well update. We can make sure the income statement also matches with real life data. So let's do that. Went down too far. So starting with sales, what do we have for sales for Smith & Wesson? 626.6, so 626.62 million. And then we have cost of goods sold. Cost of goods sold is listed as 372.71 million. There's sub-account. We can ignore the sub-accounts like the depreciation and amortization is already in there. Okay, that gives us gross profit of 254 million rounded off, and that indeed does match up with the gross income on the MarketWatch income statement. So let's continue. Now we have the operating expenses. That's like, well, here it's just operating expenses. There's just one. The MarketWatch income statement, there's several operating expenses, which let's see, we have, so let's include them. How many are there? Well, there's SG&A, that's administrative basically, other operating expense, which is 0, and then this unusual, and you may find in yours your MarketWatch financial statement some odd items like this unusual expense 1.27 million, which reduces EBIT after this unusual. So I guess that's an operating expense because EBIT is operating income. And then there's these non-operating incomes and expenses. So they need to be added in there. They're on the income statement, so they need to be included on the income statement. So I'm going to go ahead and put them. Well, this unusual expense should go before calculating NBIT. So I'm going to go ahead and insert that there, unusual. And that's, we say 1.27, certainly. So that's going to make it so our net operating expense is, let's see, net operating income rather. Need to include the unusual, so minus this. It's gonna make it a little bit, okay, operating expenses 3,000. I didn't fix that yet, did I? That's SG&A, we'll just put, that's 104.49. Okay, so that brings us to 48. And we really don't have, anyway, okay, and then we have interest expense. Before the interest expense, we should have, well, we have 2 items, right? 2 more odd items here, apparently. You just gotta, bear it. We have non-operating, it's an expense, so that's non-operating expense. Don't know what that is exactly, but we need to account for it. So, and that is 2.15 million. And then we have also non-operating income of 149,000, so that's 0.149 million. And then the interest expense is listed as 9.52 million, so 9.52. So that makes EBT. Some of these things we also need to subtract, minus the non-interest expense, and we're adding apparently this non-operating income. Okay, so that makes EBT, taxable interest, or pre-tax income 137 million, 130 rounded off. Let's see if that matches. It looks like it does. 136.6 is what MarketWatch has. So I think we accounted for those unusual things correctly. So now income tax is again given as over here 48 million even. So just put in 48, and that makes our net income, which doesn't need to be adjusted. It's just EBT minus tax at 89 million, and it does appear that rounded off, that does match what we have on MarketWatch. So it looks like we've done everything correctly. And now we see these ratios have automatically adjusted. All we need to do really is to add a couple. Remember, average collection period, that's the same thing as days, days in receivables. So for the asset test ratio, we could add that asset test ratio. That would just be, let's see, current assets. I'll put an equal sign because it's calculated. So it's going to be equal to, it's going to be current assets minus inventories. And let's go down here. Let's make sure we got this equation right. We should probably put those in parentheses, right? So current assets is C94 minus inventories is C93. We're going to have the whole thing divided by current liabilities, which is right there. So divided by current liabilities there. So asset test ratio is 1, really? Did I do something wrong? C94 minus C93. Oh, that, yes, it's not, current assets is C95, not 94, so I need to fix that. So it changes this to a 95. Yeah, and that should fix it. So now it's 2. Let's check this, make sure that makes sense. Well, I think I have to double click it to actually see the cells again. So that is 239 minus 87 all divided by 93. It looks like that's about right. 239 minus 87 is about 160, 170. It's a little bit less. It's rounded off to the nearest whole number. I'd like to see that. Let me see if I just multiply this by 100 just to see what the other digits are. So it's 1.65. There's probably a way to have it. I know there's a way to, well, I'll figure it out later. There's a way to have that, to see the digits after the decimal point. But it's not coming to mind right now. So anyway, so just this has gone on. Other things I would do would be, put in, this is assignment number 1, question. This is assignment number 2, question 1. Sorry. I would put the ticker symbol. This is SWHC was a ticker symbol. You definitely want to put the ticker symbol in there. I want to just let me know that's a ticker. Okay. So I don't have to go looking for it. Obviously I need to know where the numbers come from. I'm going to want to verify the numbers, at least for some of you, probably for most of you. And especially if you do it on paper, I'm going to really need to know what the ticker symbol is in that case. But at any rate, so this is how I would do it. This is for just the first part of the assignment. And then I would copy it. Just click and drag. Do like Control C to copy. Then I'd go to a new spreadsheet or your assignment, what you're going to turn in, the spreadsheet that you're going to turn in, and paste it there, like so. So there it is. And then file, save as, whatever. Save it and then post it. Simple enough, right? Okay, so good luck with that. And as usual, if you have questions or get stuck, can't figure something out, feel free to send me an email or you can send me a text message. And my phone number is on the syllabus. It's 202-0380. The reason I don't say to call me is just because if I don't recognize the number, I might not answer it. So so send me a text message. Let me know that you're from this class. Say FIN3225 and ask anything you want, or just send an email, which is what most people do. Okay, good luck and have a good weekend.